Oh, welcome to the Trading Group 1 meeting. Today is the 16th of June, 2020. So welcome, everyone. So I see Curtis is here. Hi, Curtis. I know you wanted to talk. We keep missing each other on Skype, but nice to have you here. And Iggy's here. Mark's here. So Iggy, how's the Schwalbe Trade doing?
Hello, Tom. Yeah, Schwalbe Trading is fine. I'm doing nothing since nearly 4 weeks and wait for expiration. So that was a pretty lazy trade. Only 3 adjustments in 3 months. That's not too much work.
Yeah, that's
and
good.
a nice profit with really very low risk.
That's great. So this trade's expiring pretty soon, isn't it?
Yes, on Friday. And on Monday next week, I will open the new trade. And I posted in the forum some numbers about the trade. So I can show in OptionNet Explorer the trade. It's only three different adjustments, and that's it.
Yeah, sure.
And then I share my screen.
Okay, sounds good.
Do you see it now?
I don't. Not yet. It doesn't look like you're sharing screen. Let me make sure that there's a setting. I know. Where is it? Security.
It's
Okay.
deactivated.
All right. Give it a try now.
Ah, yeah. Okay.
There we go.
Okay. Also here was the 23rd of March. And here the vertical, here the butterflies, here was the break level. But one day later, the price already went up and away and never been seen again here at this level. So why doesn't it work? No. So this was one day later, really a huge jump. And the relationship between here, the profit line, and the middle or the lower expiration line is 1 to 2. That's normal. And the next adjustment I did on the 15th of April. So it was nearly 4 weeks later. Because the price ran up very far, and from here it's nearly 30% away from this price. So I decided to sell another vertical here. And of course I add here the risk, but it's, I mean, this is a 30% distance. So I think I can take the risk. And this risk, this additional risk here to the downside was only valid until the 28th of April. So it's just 13 days. And then it looked like this. I bought the vertical back. Then there was only a very small risk, and the relationship between here and here is much better. It's about 3 to 1. And then the last thing is I bought back here this vertical. And this was on the 26th of May. So one month later, I have to wait a minute. No, here. Now it's flat and above 0. And I will do nothing now until Friday, until it will expire without paying any commissions, because buying back the butterfly doesn't make sense because I have to pay more commissions than the price I get for it. And that was a really very lazy trade because the jump at the beginning was really very huge, and that doesn't happen very often, but it happens. And for doing nothing, it's a nice profit.
Oh yeah, for sure.
Yeah. And the next one will start on Monday. And there was an 8% drop the last days. And when the trade already run to the upside and 8% down, I really don't care, because there was such a huge distance. And this also happened, for example, at the flash crash. Before the flash crash, the trade, the SPX was running to the upside. And then there was a flash crash, but the flash crash didn't cross my break level. That was pretty lucky. And so I finished the trade with a nice profit. But sometimes, of course, when there's a huge jump to the downside, as on the 27th of February this year, though I cut the trade, of course, with a small loss, and then now I'm profitable again. And now I will start the next one on Monday, and we will see what will happen.
Yeah. And I guess I can put the link in the chat. Let's see.
And the most important thing is I always want to get here the expiration line above 0 at the end, so I don't have any risk. Sometimes there's here a step to the downside. It depends on how much I have to pay for it, and or sometimes I close the trade sooner when there's only a 5 to 10% profit left to the top, so I can take off the risk and may close the trade sooner. It depends on the situation, but it makes sense sometimes. My volume is too low.
Oh, it sounds okay to me. Anybody else think Igi's sound volume's too low?
Sound is good.
Sound is good. Okay.
Okay. So that's it about my trade. Pretty lazy. Have to work 3 times in 3 months. That's okay.
That is pretty good.
Yeah. It's just waiting for the loss in time value, and that's it.
Well, looking good. And do you have a an updated profit and loss curve, like an equity growth curve you
I
could
will
show?
do it. I will do it the next day when it's really closed. So I will do it on Monday.
Okay.
And yeah, the maximum risk here in this trade was I posted it in the forum. It was about 4.5K, but more than 30% below the price. So that was not really a risk. And the initial risk was about 2.5K. And the profit now is 1.5K for 4 tranches, of course, not for 4 tranches, not for one. And that's a pretty good relationship. So to the risk at the beginning, it was a pretty nice relationship. But of course, you don't know at the beginning what risk will be in the trade, because when there are more adjustments, there might be a bigger risk. But no fatal during the whole trade. That's the most important thing.
Now, is there a maximum risk that you'll take per tranche?
The maximum risk is 2 adjustments. This is a 30-point wide butterfly, and when I the maximum adjustments I do are 2 butterflies. I sell 2 put credit spreads here, so I get a credit for it, which is about $7 to $9. It depends on where it is, and that means that at the beginning I have a risk of about 700 for one tranche, And when I sell 2 put credit spread additionally minus the credit I get, the maximum risk is at about 3.5. So that's my calculation.
Hmm.
But the T+0 line is never there. It's always much higher.
Right.
For example, on the 27th of February, the loss I took was only 39% of the max loss. And that was really a huge drop, much deeper than normal. But it's reality, so
Yeah.
you can't say in advance.
Well, looking good, Igi.
Okay, so I start on Monday, and yeah, we
Yeah.
will see what will happen.
Yeah. Well, this one definitely is a good one. So hopefully the next one will be just as well. Well, thanks for updating us.
Would you trade 200K with this trade? Oh, blah. 200K is a lot, but I mean, it's a mini options and they are very liquid. So I don't have 200K, but a mini options are the most liquid in the which you can trade in options, I think. So that I think that, don't know if 200K, maybe
I think it should be
100K.
okay. Yeah.
Well, but don't do all in.
Yeah, you want some diversification.
Yeah, sure. But 200K is, if I take the same risk as in this trade, this 4 tranches I did was on a 20K account. So 200K would be 40 tranches. So that will not be a problem, I think.
Yeah,
Not
that should be
really.
you should be able to get filled with that, no problem.
Yeah. And it's not some unusual combination. It's a vertical and it's a butterfly. It's not a broken wing butterfly, just a flat butterfly. And very simple vertical. So I don't think it's a problem to get filled.
Plus it's a 3-month trade, so if you get
Yes.
filled, in over a day or 2 or 3, I think it'd still be okay. You could probably trade quite a bit more than that if you really wanted to.
Yes. And if you have more tranches, it's good to do, for example, I take off the risk step by step. For example, the last adjustment I did, the last adjustment I did step by step here. The first one for 20 cents, then for 50 cents, and the last one for 10 cents. So all in all, it were about 13 cents for buying back here this vertical. And I can step by step reduce the risk here. And the longer I wait, the better, because the loss in time value is getting bigger and bigger and bigger until the end.
Oh, and Marcus was saying he was thinking more about risk reward versus liquidity.
The risk is still defined from the beginning. There's no fat tail risk, and if the volatility is going to the upside, which is doing it all the time at the moment, volatility is really not the problem, because it's very resilient against volatility spikes. And it's even when the volatility will go to the upside, the volatility is not the problem. The problem is when the price is running to the downside, but you have your limited risk, and the risk reward ratio is 1 to 2, 2 to 1, 1 to 2, risk reward 2 to 1. So and if there's a, there's a risk, there are here my spare parts storeroom. this butterflies for lifting up here the middle expiration line, because the risk zone is here between the butterfly and the vertical. And here is my break level, and when it crosses the break level, I cut the trade, no matter what happens. If it's below the break level, then I go out. Sometimes it returns, sometimes it gets deeper and deeper and deeper. For example, on February, I went out, and after that, the SPY fell down for more than 75 points. That was a pretty nice distance. Or the SPX 750 points, and I was out, and that was really a nice feeling, because in 2018 I traded broken wing butterfly, and that was some unusual nights.
Right.
And here I was really lucky. No trouble at all. I'm pretty quiet. I know my loss. I know my max loss, and I know my risk, and that's it. And volatility is going to the upside. I don't care. It really, it definitely helps a little to lift up here this expiration line a little bit. Not much, but most important, it's not running against you.
Right.
And the most trades, I think the problem of most trades is the expiration line here in the danger zone is at the most trades is below your expiration line. And here the T+0 line is above the expiration line. And that's the most important thing. And the trouble is on the left side, not on the right side. As long as I'm on the right side, I don't have any trouble at all. I wait for expiration. And when it's on the left side, my expiration line, my T+0 line is always above my middle or lower expiration line. And that's the most important thing for me. Similar to road trade? No.
Yeah, it's quite a bit different.
Yes. Parking trade, I don't know the parking trade.
Now the parking trade is just a vertical spread. It's not a butterfly. It's a completely different strategy.
Mm-hmm. But I start at the money here. And I think the parking trade is starting out of the money, yeah?
Yeah, pretty far.
Yeah, and here I have at the start a relationship 1 to 2. And you don't, I think you don't have it at the parking trade, because the lower you go with the vertical, the less the relationship here, the ratio gets more worse. And here it's still okay, 1 to 2. That's why the performance is pretty well. And when it's going to the downside, I can repair the trade a little bit, as long as it stays above the -5% here on the break level. And I like to do adjustments and sell put credit spreads here, because this lifts also up the upper expiration line. But my target is to move this middle expiration line above 0, so I don't have any risk at all at the end. And of course, it also lifts up here the upper expiration line, and sometimes it's triple the size at the end from the beginning. That happens. Not often, but it happens. So we will see what will happen on Monday.
Yeah, well, this trade's basically done. Nothing bad's going to happen to it. Volatility is elevated. Does that help your entry price?
High volatility, you get slightly better prices for the vertical, but sometimes you pay more for the butterflies. So here you sell, here you buy.
So
Higher
it kind of
volatility.
offsets each other.
Yeah, yes. It's not really a big difference. And I also made the only reason for opening the trade is the Monday after the triple witching day. Triple witch day, witching day,
Yeah, triple witching.
witching day. Okay, that's the only reason. And I start the trade in high volatility, in low volatility, in middle volatility, no problem. And I always get nearly the same price all the time. For example, here in such a situation, in this for one tranche, I get in this setup about $200 every time for one tranche.
Yeah, looking good. I'll put in the meeting description the link, but if anybody's interested in signing up, um, there's only 4 trades a year, so the next one starts on Monday. So this is
Yeah.
actually a pretty good time if you're curious about the Schwalbe to to give it a try.
It's not really high frequency trading.
No, quite the opposite, really.
If you have to do something other, or you are still working, I only trade end of day. Very important. I only trade end of day, so I reduce the noise of the day and only look at the end of day, the last hour before market closes. That's it. And most of the time, it's not time sensitive. If you make the adjustment today or later on, and if you trade the E-mini, it's no problem because it's trading around the clock nearly, except weekend. But when I start on Monday, you have five days left. Except here, this trade, there was a price, and the next day it was here. That was pretty unusual.
That is unusual.
Yeah.
But I mean, you've back tested this quite a bit, so it's and it's behaving from what I've seen, just like the back testing data predicted.
Yes, I think that's the most important thing because sometimes I don't make any adjustments at all in the trade. So where's the difference between live and back tests? There's no difference. And I have my fixed rules. The only thing is the slippage might be bigger or smaller. That's the only thing, but I don't do so many adjustments. And I tested it also in the SPX from 2007 to 2009, and from March to 2007 to March 2009, I get out with a small profit. Of course, there was a small drawdown. But the biggest drawdown was minus 11%. That was not much because often I can make some adjustments before the trade will crash and drop through the break level. And when I can do some adjustments before, it lifts up here all the lines, including the lower expiration line, because I will always buy back the butterflies when I made an adjustment. So I lift it up again, and then the risk is pretty reduced. It's all about risk in this trade, and I try to only take as much risk as needed, as necessary, and yeah, that's it.
Well, definitely looking good.
Okay, I have to leave. There's another meeting now. Thank you for presenting, Tom.
Oh, well, you were presenting, but yeah, thanks for updating us, Iggy.
Yeah. So I will leave now. Sorry.
No problem. Have a good evening.
Yeah, thank you. Bye-bye.
All right. Cheers. All right. So, Curtis said, just wondering if you can talk. Let's see, I can probably unmute you. So, good morning, Curtis.
Yeah, I'm here. Hey, Tom.
So, I guess you wanted to had some questions about forex.
Yeah, I wanted to learn to trade forex just because I've never done anything more but just dabble in it, which is dangerous. And I wanted to have something that I could turn to that was uncorrelated, you know, if the market was otherwise crazy. And I think this market is setting itself up for disaster. You know, I mean, the way it is trading and the price it's trading at, I think are totally insane.
It surprises me that even with this V bottom type of rally we've had, you know, look at where the VIX is. That's kind of surprising to me.
Yeah, yeah, that's right. We're well over 30 in the VIX, and you know, we max out the ATR every day, um, every day. We are all over the place, and you know, the market. It's like they can't wait to get up and start buying stocks. You know, and I just don't see it. I don't see this economy coming back. I don't see these jobs coming back. But that's just me, you know, and opinions are cheap. So I'm sure everybody has a wide range of opinions, but I do think the stock market is grossly overvalued. So, you know, I've been trading calendars and, you know, trading them small, you know, a little 2% of my portfolio at risk. And doing it on weeklies, and you know, this thing that fella did in the Raleigh Durham a week or two ago, we're doing just almost exactly that trade.
No, which trade is that?
It's a calendars. Oh, what the heck is that guy's name at the Raleigh Durham meeting?
Don.
Sheridan guy. He's an old Sheridan guy.
Oh, one of the mentors, like Jay Bailey, Mark
No,
Fenton.
it wasn't. No, let's see. Raleigh. Let me get on your website here and. Oh no, that was Don Kaufman, not Raleigh Durham. Then where did
Yeah,
I
he was
see
a
that?
Thinkorswim.
Where did I see that? Uh, was it on Basiago? Yeah, his name is. Yeah, I had that wrong, and I have it wrong in my notes from the Eagles meeting recently, so I'll have to correct that. Anyway, you know, it's just a basic old Jay Bailey kind of calendar and adjustments and stuff that Roger Veros reminded us of, and you know, we got a little set of guidelines and a trading plan for it, and everybody's trading it real small because you can't outrun this market when it panics. You know, I think
Right.
we're set up for it. I think we will have another major panic.
Well, I like to look at shadow stats. It's John Williams was an economist. I think he worked at one of the exchanges in Chicago, like CME or CBOT. I'm not sure which one, but um, he's uh, he's always worried about hyperinflation, and with all this printing presses turned on full speed, it makes him even more concerned. So yeah, and you know, people predicting the crash of the dollar, and there's always people doom and gloom predicting crashes, but the Fed's
Sure.
printing press
Yeah.
is going on, and you know, it's a fiat currency. It's not backed by gold, and history is not kind to fiat currencies over time.
Yeah. So, which really just means there are trading opportunities there. And you know, I'm more about at this point trying to find people who have trainings and stuff. You know, there's a guy who has a thing on YouTube called No Nonsense Forex, and he's a maverick trader with about 10 years of experience, 9 or 10 years, and you know, it perks me up when somebody says, you know, it's more, your trade management is more important than your indicator. You know, it's good to have good indicators or signals or something you can use to have a little bit of an edge, but the expertise you have in getting in and out, and stops, setting stops, and just money management stuff is going to be really important. So, you know, it does feel good to have some years of trading experience, you know, so I'm not starting from zero and I can work my way through videos on YouTube. You know, I've already been at it for about 10 days. And I've probably got another 2 weeks of listening and going through this stuff. And I've got to learn a new trading platform. You know, I like this IG US trading platform brokerage. And I have to learn the MetaTrade 4 system, you know, things like that that I've never dealt with before, that my old brain have a hard time playing catch up.
So I haven't heard of IG. Is that
IG
is
is a
just
big
IG.com?
British IG, yeah, IG.com. Yeah. IG US is the name of the brokerage. You know, and it's just a fairly straight ahead MetaTrade 4. They have both 4 and 5, but I'm looking at 4 because it's a little simpler, not much. And they, you know, the spreads, you know, that's what you pay. That's how you pay for trades in forex, is the spread in the retail trading platforms anyway.
Well, at
So I'm not
IB,
worried about that.
IB has their commission is I think 0.2 basis points, something like that, or $2 minimum.
Ah, okay.
So the brokers, they charge different commissions, but it's pretty reasonable, and the leverage is pretty good. I think in the
Yeah,
US, it's,
I think a lot of people use IB, you know, just because they have this enormous volume, and it's fairly cheap. But nobody likes nobody likes their trading platform, you know.
yeah. Well, I've been using it for pretty pushing 20 years, so
Yeah,
I'm pretty used to it. But yeah, I mean it's
yeah, that's it. And being used to it is sure um, worth a lot when you have had to learn so many things and learn to do things so many ways. Thank God the Thinkorswim platform has been very advanced and very useful to a lot of us for many years. And it's basically the same as it was, you know, when I started.
now there was a comment about the IG in the chat. Says you can't use IB. Oh, can't use IB as a US investor unless you're an ECP. Yeah, I know
Right.
IB, they changed their rules for Forex trading. If you opened up your account in the last couple of years, I think it is like maybe 2 years, you have to have a $10 million account to trade Forex. So if you don't have an older IB account, then you're not going to be able to trade Forex unless you have fairly deep pockets.
I see. Yeah. Yeah. So IG is just something that is recommended. There are lots of them out there, and I'm sure they're all, you know, decent ones. I don't really have a big opinion about that. I have so many other things to learn. Um, that's not it's not, you know, finding indicators is not even on my desktop yet. You know, I've got to learn how to enter trades with stops, and you know, how to pyramid up and follow trends. Seems to me forex is all about trend following. You know, that there's not going to be support and resistance so much as, you know, just following trends as they emerge. You know, about all you can do.
Well, that's typical directional trading, and I don't think that's unique to Forex.
That's true. That's true. I've you know, worked with trading ES futures from time to time, or oil futures, sometimes gold futures, but mostly oil and ES. And you know, you always feel a bit like you're sitting at a blackjack table, which is never one of my fun things to do. Are you a gambler, Tom? Did you ever
Well,
make
no,
it to the casino?
I do have a couple of good stories, but I played roulette one time for about 15 minutes, and I think I started with about 20 marks. This was in Germany, and
Yeah.
I'd gotten it up to like 200 in 15 minutes, and I quit. And I said, "Okay, I'm done."
Never to trade again. Never to roll the roulette wheel again. Yeah. Yeah. Good for
It's
you. You got out.
yeah, I got out with a profit. Yeah.
That's great. So
So
what is again? I don't want to bore people for things that you may have gone over in the past among your regular attendees, but what is the ExperSignal system that you work with?
okay. Well, before I do that, I'll share my screen real quick. I did a presentation, I think it was last fall, and one of the things I looked up was the U.S. regulated forex brokers. So if you can see my screen, this is the list that I found, and I'm not sure if it's changed at all. Probably not. That stuff doesn't tend to change very often. But there's a list of the forex brokers that are regulated in the U.S. Now, as far as Andrew's suggestion of trading currency futures, that's a good one because the futures market is a regulated exchange. But all these brokers are also regulated in the Forex world too. But yeah, there's lots of ways to trade Forex. You can do it with the spot currency, like with these, or the futures or the ETFs. Yeah, there's lots of ways to trade it.
Yeah, some
Now,
people don't like the futures currency futures because they don't have the odd little smaller currencies, you know, the minor currencies and
yeah, and
things that may be
Jen,
trending more.
yeah, and again, here's a list of, let's see if my screen will change here. Those are the major currencies
Right.
that people consider majors. So I only trade the majors. ExperSignal only uses the four on the left. But
Mm.
yeah, you kind of want to stick to the majors if you know that's where the volume is. I remember years and years ago, I had a Mexican peso trade, and darned if I've still got some Mexican pesos in my account I can't get rid of because they're so small. It's only like $1 or $2 US worth of Mexican pesos, but it's so small, it's just I can't get rid of it. So
Yeah, I had a bunch of several tens of thousands of Mexican pesos that I got back in 2003 or four. And the next time I went back to Mexico, they had devalued their currency, and the
oh,
old
nice.
currency was worth like 10 cents on their peso. You know, it was worthless, basically.
And it is funny because we may have a future daughter-in-law who's from Mexico, so
Oh,
kind of funny.
wow.
But yeah, so the currencies, that's where all the volume is, especially on the futures. In fact, I have a slide. Let me see if I can find it. Um, so I had this thing, trading currency futures. Where is it? Oh, here it is. So these are the full contracts. So 6B, 6E, 6A, 6S. And then that's how much each contract's worth. So like when I trade, I try and use about 100,000 currency. The euro is 125,000, but Aussie dollar and Swiss franc, oh, and Swiss franc's also 125. And when I do the British pound, I do 2 contracts because it's only 62,500
Mm.
units per contract. So you can see the value for a pip over here, 6.25 versus 11 and or like
Yeah, that's
10 to 12.
comparable to Forex.
Yeah. So, but the forex is more granular. So if you only want to trade, instead of 100,000 units, you only want to trade 10,000, or you can.
Yeah, they have
Um,
mini lots and micro lots.
yeah. So here's the micro contracts, and just the M6B, M6E, etc. And then the contract months, years, termination trading. So I did a volume analysis. Now this is back in November, so kind of gives you an idea of how many contracts are traded in a day. So you can see the euro is by far the biggest, and I expect this fluctuates a little bit, but the euro, the Aussie dollar, and the British pound are always up there. Swiss franc's a little bit less liquid as far as the futures go. The micro contracts don't have much volume except perhaps the euro. And then the Swiss franc was basically dead, 207 contracts. So bottom line, if you're going to
Wow.
trade these micro contracts, stay away from the Swiss franc because you're basically trading with yourself.
Right. That's futures. Yeah.
Yeah.
Pretty
So, but again, you can trade the spot currency and trade as much or as little as you want. But it behaves almost identical to a stock. There are some differences, like the trading hours. Like Sunday, it opens up at 5 p.m. Eastern, where the futures markets open up at 6. So, like for me with ExperSignal, the software is actually looking at the spot forex. So I can actually update the software before the futures open. So it's kind of like, people trading stocks or equities. They look at the futures to see what the market's going to do. Well, same thing with forex. You can look at the forex market an hour before the futures open on Sunday. Excuse me, and see what you're looking at when the market opens.
So how active are you in all that, Tom?
How active? What do you mean?
How active are you in trading any sort of forex, whether it's retail forex or these future contracts? I mean, are you doing this sometime during every week, or just?
Well, yeah, I look at the software multiple times a day, but the trades I've got. Daniel Lyons built the ExperCharts software, and the version he gave me last year was a end of day version. So I've got 2-hour, 6, 12, and 24-hour bar charts. So it's a slower thing. So the number of trades I've been doing with the service has been about 3-4 trades a month on average, something like that.
Okay. Just kind of little swing trades or something?
Yeah, they've been swing trades. However, Daniel has been working on a intraday version. He trades intraday on the British pound. So he's actually preparing an intraday version for me for the pound and the euro. And I just got a message from him yesterday. Let me see if I can find it. He's almost done with it. And he's been making some changes and making it easier for me to use. In fact, over the time that I've known Daniel, which was since about 2002 timeframe, 2003, he's never had a signal generator, a mechanical one, because he never believed in that. But he decided, maybe I should do that. So he's actually generating or adding a signal generator to the software. And here's what he told me. So the M10 version, he called it's a 10-minute charts. This will be ready just in a few days. So the plan for me is to start using this intraday version. So I should be able to get, 1 or 2 signals a day if things go well, because I've got 2 currency pairs to look at. So the number of trades for me is going to increase dramatically, and then after he gets this to me, he's going to take some time off in July. He sent me a link of where he's going. It's really beautiful in Australia. But then he'll look at the futures version. So for me, the futures version is important because I'll be able to do ES, the S&P 500, gold, crude, and some interest rates. But
that would be cool.
Yeah, the ES one will let me be able to get ExperSignal calls on SPX direction, which I'll start doing option trades on SPX again. Because some people, they don't, and that's one of the drawbacks of currencies and futures is that, the markets are open 24 hours almost. So you can get signals at 2 in the morning, 8 o'clock at night, at noon. It's kind of all times of the day. But if I'm trading something on SPX options, obviously it's only during US market hours. So there is definitely some interest in that. And as you can see here, he'll start looking at the future stuff after he gets this intraday version to me. So I don't expect it to be soon. That's the one thing with Daniel. He's a professor of applied math and cosmology, space physics, and he's extremely meticulous.
Wow.
You know, things that you think will take a day or two takes him a month because he codes it. And he's written all this stuff in C++. It's hundreds of thousands of lines of code. But he'll code it and test it and you know, analyze it and test it some more and tweak it and analyze it and test it. So when he was just an example, when we were using eSignal data years ago, it took him a year to be happy with the data processing that he did, getting data from eSignal, which is generally considered pretty clean data, but it wasn't clean enough for him. So
Wow.
he spent a year literally getting all the stuff, so he was happy with it. But that's coming extremely soon. He's been working on this for a while, and like he said, just a few days. So the number of trades I'll be doing will probably, you know, 10x, I imagine. And the return should be, you know, probably pretty exceptional, I would think. But Daniel's the only guy I've ever met who never loses money trading. He only trades 3 days a week on his intraday software, and he lives in Thailand, so his living expenses are like $1,000 a month for everything. So he doesn't need to trade many contracts, except for his medical, because he's got a pre-existing medical condition nobody will give him insurance for. So he's got to pay for all his medical operations. So that adds up. But anyway, it's working pretty well, and the software is completely different from what you know, you've probably used to seeing. He's created a whole bunch of different indicators. Let me just pull up a trade image.
Yeah, does it come with its own charting and signals on a chart that he generates? Or does
Yeah,
it?
so well, like here's a this was the Swiss franc chart from yesterday morning. I need to update one for today, but this software it's a little bit different. Actually, he had a picture of the end of day or the intraday one he's working on, but this will be good. So you can see in the background these kind of transparent candles. Those are the traditional candles that everybody's used to seeing. And then he creates what he calls neural candles. So these are kind of smoothed out, so you can kind of, you know, it's not as jumpy, for instance. But he has this blue line that goes with it, and basically if these candles are below the blue line, it's bullish. If it's above, it's bearish, and then the candle color also indicates that. He's also got this neural candle indicator down at the bottom, and this is like slightly bullish, slightly bearish. That's bearish, that's bullish. And then
The MACD.
and then this pressure bar, but it's looking at different things. Like these are anchor points in multiple time frames. So he's got these actually this will be like the first one is actually the 6 hour, 12 hour, 24, 48. There's one more that he doesn't show, but the software is trying to find actually what he calls it. Just go to the page with, oops, wrong one. Oh yeah, this is the document that he gave me a long time ago. So it's trying to find different patterns with turning points. So he classifies all the trades as one of the, each turning point is one of these 10 different turning point types. Groups them together in pivot groups. Has a bunch of statistics on it and stuff, and then he's trying to find. Well, he's talking about his child neural networks, and it's a lot of advanced math, fuzzy logic, you know, all kinds of stuff. But he's trying to find where, in his example of a fighter pilot chasing an enemy with a laser beam, and he said there's no three moving body equations that can solve it, but you can look at. In fact, let me go to the link that I was thinking of. There it is. Okay, so here's the fighter pilot thing he was talking about. So you can use triangulation to map the trajectory of your target jet. And then despite the target's ability to speed up, slow down, go left, right, whatever, you can use parallel calculations to generate a series of curves or waves, which will allow you to track the jet very accurately. And that's what he does with the market.
Wow.
So at a certain point, the target can't defy the laws of physics, and that's when it reaches an event horizon. Remember, he's a cosmology professor, when event horizons like black holes and stuff.
Yeah, yeah.
So he's like, and he actually, when we were visiting him in Australia, he had taken his engines to the university, and they actually had a big computer that were tracking this and plotting it in real time, these 3D graphs. And he said that the guy who was running the console with him said, "My gosh, he figured out how to predict the market." Because he's looking at these waves moving, and he could see, where the minima were and when the market was turning. So that's the kind of stuff that's underneath the hood. He said it's doing, hundreds of thousands of calculations a second. So it's pretty advanced, but he's distilled it down. And he always talks about minimizing the degrees of freedom. So if you go back and look at that image, let's see, where is it? ExperSignal images. So I'll just pop this one back up. So there's only a couple things I'm looking at. I'm looking at these neural candles, if it's above or below this blue line, this pressure bar, he calls it. And there's one on the 2-hour chart, another row above that. This is like a primary pressure bar. And it's only got 3 states, bullish, bearish, or neutral. And so that's one indication. And then the neural candles. And then this is another candle of the neural candle indicator. So when you're looking for a bullish trade like this, as long as this is moving up and this is bullish, that would be like a bullish bar right here. So he's distilled it down to just several things he needs to look at, but behind the scenes, there's a lot going on. And I remember he told me years ago that if you asked 1,000 traders about multiple time frames, he said, only a handful will actually be thinking about it, and the ones that do think about it incorrectly. So, I believe him. He's pretty exceptional with math. He's the kind of guy that'll sit at a cafe and do a math theorem or math proof for fun. So he's quite the guy. But that's basically the software, and the intraday version is a little bit different than this, but similar. But it's also going to be having the engines are generating trading signals off of it. This is just generating information, so I have to interpret it. But once I get this intraday version, it'll be more precise as far as the software telling me when to go long or short or exit.
Yeah, so as in terms of a signal, it's just the pretty much the color of the neural chart, right?
The neural candles.
Neural candles.
Basically, I mean that's a big part of it. You don't want to take a trade against this.
Right.
And I'll check the 12-hour chart versus a 2-hour chart. So basically, the way I'm doing it right now is I'll get one of these anchor points, and the anchor points show when the software is thinking that there's a turning point happening, and the longer the time frame, the more significant it is. In fact,
Right.
I've got some data on the turning points on the class page. So if I look at the British pound, for instance, here's the 6-hour, 12-hour, 24, and 48-hour anchor points, and this is the average move, and it's actually times 10, so
10 in
300.
pips? What is that?
Yeah, so like 359 pips.
Okay. Wow.
So this at 878 pips on a 48-hour anchor, which is the average in between 48-hour anchors. So I'm basically waiting for, and I call these 24 and 48-hour anchors the major anchors, and these are the minor. So I'm looking at anytime I get a major anchor in one of these 24, 48 hours, then I'll go switch to the 12-hour chart and wait for that to confirm so it aligns. So basically, if you look at these images, let me look at a 2-hour chart that'll show it. So it has like these little dots down here, or squares, when it has an anchor point, a new one prints. And what happens is if the market's moving down, it'll think, okay, maybe this is it. So it'll print one. And then if it stabilizes and reverses, then it'll be confirmed on the higher time frames, and then you can look for an entry. But until it's confirmed, you don't take an entry. So in this case, it tried to rally a little bit, failed, and then kept moving down. And then it had another, like a Ross hook, but as Joe Ross would call it, a pointy point on the chart. So it might say, okay, now this is possibly the new anchor, so it'll move it. And then the prices fell a little bit more, and it says, okay, well, now I think this is it. So again, you don't want to take these trades as soon as you get the anchors, because typically they'll move a couple of times. But you're just waiting for confirmation. Again, it's that fighter pilot analogy where you're waiting for triangulation of different things. And then these horizontal lines are Murray math lines, which are based off of Gann's rule of 9. And oddly enough, this was right at a lower blue Murray math line, which is one of considered like strong support. So it kind of bounced off of that. But that's the kind of stuff I'm looking at.
So it doesn't print little green arrows that
No, it's
come
not
up
like
and then disappear.
what
I hate
was it?
those kind of charts, you know, where it'll print one of those little arrows and then it'll disappear in the next candle, you know.
Well, that was a problem with Daniel's XO4 engine, which is one of his main engines. He used to display it down here in the bottom part of the chart, and it would self-adjust itself up several bars in the past. So you would look at a chart like this and you'd see, well, the signals are perfect, but then if you're trying to trade it in real time, over on the right edge, it might generate a signal, and then you get in a trade, and then the market would reverse, and the software would self-adjust itself in the past, and then
erase
the signal just went away, and you're like, well, I'm in a position, but the software says I shouldn't be.
Right. I could have sworn that I saw a little indicator there.
Yeah, but it doesn't do that now. The stuff that he's showing on the software doesn't self-adjust itself in the past. The only thing that changes is the latest anchor. So that's why you don't want to just jump on a trade as soon as you see the anchor. You want to wait for confirmation. And the intraday version is similar, but again, he's studied it and come up with a pretty good algorithm for actually doing a mechanical signal generator, and with also like the best time to exit kind of stuff too. So I haven't seen the software. I've just seen screenshots of it. So I'll get it probably in the next week or so. I'm thinking, from what he was saying on his email last night and the day before.
And can one subscribe to these signals on Aramir?
Oh yeah, just just aramir.com/ExperSignal or /XPS if you don't want to type the whole thing in. And then it's like $15, I think, for the first month. And then, if you don't like it after a month, just cancel. It's not a big deal. But it's directional trading. So one of the things that I was doing, and actually I built this tool for anybody, is I had a spreadsheet that I would use to calculate the, what do you call it? The stops. So let me.
Yeah.
So I built this profit and stop calculator. So let me just show it. So this is for everybody to use. And the problem always was, you have multiple entries. Like say you're trading a couple of contracts, and just for the sake of argument, we're doing like the British pound. So 1.25, 1.2, oh, actually, let me set it to currencies. So 1.25, 10, 1.25, 15, 1.25, 26, something like that. So it's calculating what the average price of these is. So now I can just click copy, and depends if I'm long or short. And I've got it set to pips with 4 significant digits. So because I'm using pips, say I want to use like a 50 pip stop and maybe like a 28 pip profit target for the first contract, and like, I don't know, 41 and 75. So now it just told me what my stop and profit targets are. And if I go short, it'll reverse it. So I was always having to do this manually, and you know, with a spreadsheet, and it was just kind of a pain. I was like, you know, if I'm on the road on a tablet or something, I won't have my spreadsheet, and I want to keep it spreadsheet free as much as possible. So I made this tool here for everybody, so it's free to use, and it actually I use it every time I do a directional trade. There's also another one in here for forex trading. Let's see if I can find it. Forex trading. Come on. Oh, there we go. Forex trading. So these are the 4 currency pairs that I trade with ExperCharts. Again, the intraday one that I'm getting soon will just have the euro and the British pound. And then here's something Maverick uses. So if you have an entry price 2.5 and then, oops, and then a stop price of 1.255, something like that, and a target 1.24. So that would be like a short. This is saying your potential reward divided by your potential risk is 1.82, and it's below 2 to 1, which is kind of their standard. So that's saying, well, maybe you're taking too much risk, or you need a bigger profit target, something like that. So now it would be fine. And then there's also this position size calculator. It's actually an iframe from Daily Forex, and I've got it filtered to the pairs that I trade, but you could always go to Daily Forex and get it for all of them if you want. But you can put in your account balance that you're trading Forex, say it's 10,000, and you want to have a max risk of any one trade of 5%, and your stop, say it's like 55 pips and you're trading the British pound. Then it'll tell you what size of trade you should put on. That'll size your position based on how much risk you want to take for the entire account. And that's always been an issue with option traders, is they don't really position size their trades like directional traders. You know, you could have like a road trip trader who's got a $100,000 account and putting all $100,000 to work on road trips, but their potential risk might be 30% a drawdown on a trade.
Yeah, and you
More.
don't at any time expect to lose that full amount, whereas in directional trading like this, you know, it happens all the time. You hit your stops all the time.
Right. And you know, it's there's more trades obviously, so it's important to manage the risk, and that's one thing I like about the Schwalbe trade, is Iggy's done a great job with risk management. And I remember I took an option X course years ago, and George Fontenelle's said when somebody came to him with a new trading system, the first question he asked is, how much can I lose? And you know, that's a good question you should ask on any trade, because the tail risk is really significant on a lot of these option trades. And the directional trades, you know, you're not guaranteed of getting out at a price, you know, like a stop order or a limit, whatever. Those will turn into market orders, so it won't get filled sometimes exactly at that price in a fast market. Excuse me. But it'll be very close. It's not going to be, you know, like you're in an SPX trade and the SPX just dropped 5%, and now your options are super in the money, and the bid-ask spread's as big as a railroad car. So, you know, they're pretty tight spreads, and there's a lot of volume on these contracts. You know, like the futures, it's, you know, tons and tons of contracts. I remember Joe Ross had a student one time that was trading 50,000 ES contracts a day. So there's a lot of volume out there.
Yeah.
You know, a lot of the options are not necessarily like that. I remember I was trading OEX years ago and had 100 lot on, and I looked at the open interest, it was 115. I was like, well, who am I trading with? And
Yeah.
you know, that problem doesn't happen in Forex or futures unless you're like, you know, a bank. Then you're probably got the volume to trade with the other banks, and but you know, for most of us, it's not a problem.
Well, Forex is volume. You want the volume to be there, but you know, if I want to trade Aussie, New Zealand, you know, that's going to be a fraction of euro dollar trading, but it's still going to be a very good price, you know, and a good spread. I mean, I was looking at the spread, in IG yesterday for Aussie New Zealand, and it was like 4 to 5 pips. You know, I thought
Yeah,
that was pretty good.
I think the pip spread at IB is pretty tight on the majors, just a
Mm.
couple of pips or even sometimes less than a pip.
Yeah,
So it's
but this was on the Aussie New Zealand, so it was, it wasn't one of the majors.
well, it depends on the broker too. Some brokers like IB, I don't think they adjust the spread width, they just charge you a commission. But
Yes,
other brokers widen the spread out and that's how they make their money.
that's right.
So anyway, that's
Well, this
this
is
one.
good stuff. Yeah, thank you, Tom. Thank you for going into that. I'd
Yeah,
like
and
to
if
explore that the ExperSignal a little more.
oh yeah, well it's gonna get pretty exciting here pretty soon once they get that intraday version because the number of signals will probably 10x, and I'm pretty excited about that. And if we do have significant volume during U.S. market hours, then I'll hopefully be able just to trade during U.S. market hours with that intraday stuff, which would be great.
Hmm. Yeah, yeah.
That was a problem. I have an arrangement with Striker for people to get their accounts auto traded through them. But the problem is because I'm not don't have a license with FINRA or whatever, they wouldn't let me touch their trading software. So I had to send them orders to get filled, but they're only around during U.S. market hours, and currencies trade 24/7, pretty well 24/5 really.
Yeah.
So it didn't work out too well because they would only get about a third of the signals on. But once I can get the intraday stuff, if I can focus on the U.S. market hours, then Striker would definitely be a player again.
Yeah, somebody in the chat asked if it would be available for a spot. It's already available for euro dollar, isn't it?
What's that?
The ExperSignal.
Yeah, again, these are the four currency pairs that I trade.
Right. Okay.
So, I do the charts. They're all in the actual spot forex. So, and in fact, I'm trading a broker account for a friend who's got. It's actually using MT4, ironically.
Uh,
They're using my account as like a master to replicate my trades to their clients, and they're testing it right now. But I'm trading spot forex with them, and I'm just using the same charts that I'm using with the futures. The only reason I trade futures and ExperSignal is half the accounts that I trade don't have access to trade forex. They're like maybe
uh,
newer IB accounts or whatever, and they don't have $10
uh,
million.
right.
So just to make it easy, I just trade all the accounts except for that friend of mine, his broker. I do everybody else in futures. Well, actually, there's one guy whose Thinkorswim account I'm trading. I'm doing forex with him, but you can do either one, honestly. And you could even trade the ETFs, I suppose, but they're not as liquid. Um, and I started ExperSignal using futures options last September, and I caught a really nice trade when the British pound had that big move up. But the problem is futures options get in the money, and closer to expiration, the bid-ask spread is super wide. So you have to end up using something like synthetics to close positions. And I don't have a problem
Ooh,
with that, but
ooh.
for running a service, I didn't really want to do futures options and have to deal with all box spreads and synthetics and stuff. So I've been kind of avoiding those, which is one of the reasons I've been kind of pushing Daniel to get a futures version of the software so I can get ExperSignal based trades on SPX, because then that's a different story. Things get in the money in SPX, you can still get them filled. All right, well, I guess I just checked the time. We're over, so sorry about that, but
Well, thanks.
I'll
I didn't mean to create a digression, but
oh no, it's always a good discussion. So I'll put the link to it again. It's airmirror.com/XPS or ExperSignal if you want to type the whole thing out. And if you want to give it a whirl, it's like 15 bucks, like I said, I think for the first month. I think I reduced it for COVID. It's normally 50, but I dropped it down to 15. So, give it a try. And this is actually a pretty good month to start it, given that intraday software is imminent. So, like I said, I expect the number of trades at probably 10x, and the results have been pretty good. I actually had one trade, actually 3 trades this month. Oops, that's the wrong one. I want to look on.
What is the link again? It's Aramir. Oh, it's not my Aramir. It's just Aramir.
Aramir.com/XPS, like this. And I guess I can put it in the chat. Where is the chat?
XPS. Okay, there it is.
How come I don't see my chat one? Oh, there it is. And everyone. There it is. So yeah, that's basically it. It is directional trading, so you can use some of those directional tools I've got on the site. I wouldn't be afraid of futures. You know, some people, they're scared of it, but it's like, you know, a stock trader being told that there's options and he's scared of it. So it's just, you just need a little experience with it, and you know, just paper trade it, or you can use even these micro contracts. You know, they do have those available. They don't have a lot of volume, but it is possible to trade it. But you know, as long as you set your stops, and you can use the tools that I've got, or use your own, you know, keep the risk under control and just, you know, give it a try. It's the water is pretty good, so come on in.
Very cool. Thanks, Tom.
All right, Curtis. Well, nice talking to you, and
Yeah, you too.
I guess we'll have everybody have a great week trading, and we will see y'all next week.
Adios.
All right, thanks a lot. Bye.